Hello guys, welcome back to my channel. So in the last video I said I'm going to release a strategy for you to be able to trade your boom and crash by catching the spikes. So let's move ahead. So in this strategy now, I call the strategy using SPIKE ARRESTOR. So that's the name of the strategy. Allow you to be able to see when the spike is coming so that you can easily identify when to enter the market to place your trade. In this strategy we need just about 5 indicators. So we need one of them on the main chart, then the remaining 4 will be on the indicator window. So the first one is moving average. The first one is the moving average, which will be on the main chart, while the rest will be on the indicator window. And the first one we're going to add on the indicator window is the accelerator oscillator, then followed by accumulation distribution, followed by Ichimoku, then followed by relative strength index, which is RSI. This is the settings for moving average, which will be on the main chart. So the period should be 200. So you can just put in these settings there. So the period should be 200, shift to be 0, and the method should be exponential. Should be applied to close. Then you put this color blue here for the start. Then you select the 4 picks here. And this one will be on the indicator window 1. So the previous one I showed will be on the main chart, while this one will be on indicator window 1. So followed by accumulation distribution, Ichimoku. So you can pause the video when you are watching. You can pause it so that you'll be able to write out the parameters of each of the indicators. Then followed by RSI. Now I want you guys to follow me as I'll be showing you the steps one by one. So I want you to calm down and look at this video, and if you have any question after watching the video, you can comment in the comment section. So what you need to do, we are majorly using about 4 or 5 indicators. You can see by clicking on this F at the top here, which is the sign for the indicators. So these are the indicators we'll be needing. We need moving average on the main chart, then we need relative strength index, which is RSI, on the indicator window 1, and Ichimoku and accumulation distribution, also accelerator oscillator. So you can go back and check the previous slide. You will see I already put the screenshot there, so you check it very well to put the settings for each of these indicators. So the indicators for moving average, the period should be 200, the shift should be 0, then the method should be exponential, then you apply to close. Then you can choose any color, but I will advise you to use the color I'm using so that there won't be any mistake, so it don't confuse you. So you can choose the style to be 4 pixels here. Then after doing that, you click on done. Then you move to the next one. You go back to your main this thing. I'll be telling you what each of the indicators will be used for later. So just know that the moving average will be on the main chart. So you can see this is the moving average here on the main chart. Let me point so that you guys see it. So this is the moving average here. So this is the blue line here. Can you see? That's the moving average. So I'll be telling you what you're using this for. So to add the remaining ones, you click on your F again. The first one you add is the accelerator oscillator. So you select you put in the settings here. The line width should be 3 pixels. The value up should be green. The value down should be red. You click on done. You go back to your F again. You click on Ichimoku. So Ichimoku, you put the first one here 10 cancel or what they call it, put it to be 9, the next one should be 26, the one following should be 52. Then you put the settings also. So you make sure you are using color white, as in the background of your empty file should be color white, so that these colors won't confuse you. So this color combination will work on if you are using a white background. But if it's black background you are using, this one that we put to be white, you also turn it to black so that it will match with your background. But for easy this thing, just make everything to be white as in your background, so that everything will blend the same way I have it here. So it's only the first, under the style now, it's only the first one that you put to be blue, and you select the pixel to be 4 pixel. So you leave you put the main one to be 1 pixel, then you put the color white there, select color white for it. Then the level is only the level, you just click on done. And after that again, you go back to your F, you click on accumulation distribution. So accumulation distribution, you select the volume to be thick, then the style to be 4 pixels, then you put color red also, click on done. Then the next one should be the relative strength index, which is RSI. Click on the RSI. If you want to, you also get it from here by clicking on the F. So if you want to add it, sorry I forgot to tell you because I have it there. If you want to add it, you first click on this plus sign. To add another indicator, you click on the plus sign here. I forgot to tell you guys. So this one is to add on the main chart, while this one, the other one here, is to add it on the indicator window 1. So after you've added your moving average first, then you add your you click on that plus sign here. You click on the plus sign here. Then you add your accelerator. So by adding accelerator, it will automatically create another window, it will call it indicator window 1 for you. So it's under the indicator window 1, you will now be adding the remaining ones. So the last one you add is the RSI. So I click on the F plus, then you search for RSI there. You scroll down, you search for RSI, that's relative strength index. So I think it should be under I see it here. So this RSI here. So once you see it, you just click on it. So this RSI, and once you just click on it, then to ask for the settings. So you put the period should be 6, apply to close, then the style should be 4 pixels. Then you can put the color to be black. Then under the levels, now we have levels here. You click on this icon, this pencil icon here, to put in the levels. So under the levels now, initially you won't have anything there. So this is what you do. Let me delete this one that I have here so that it will be easier for you to get it. So I'll be adding the levels now. But if you want to add the levels, you click on the plus sign here, then you put the level here. I have level 0. So the 0 should be what? The description for 0 should be buy. I will explain the meaning later. Just put it to be buy. You add another one also. This one should be level 50. No, you don't need level 50. Okay, let's put the other level there. The level sorry. The level should be 20, to be 5 for buy, then 95 for sell. I will explain the meaning very soon. So you leave the style to be the 4 pixels, then color should be black. Then after that, you just click on the back, then you click on done. So by the time you finish adding all this thing, you see below here, the chart will be divided into 2 for you on your screen. To be divided into 2. So you have your main window here, then your indicator window will be here. So now let me explain how to use the indicators now. So this is what you do. The one on the main this thing here, on the main window, I'm talking about the moving average now, this blue moving average, the work, the major thing to use for is for you to tell you the trend. You know, if we are talking about trading of spikes now, don't get me wrong, we are not trading the trend, we are trading the spikes for boom and crash now. So you know, we are trading. In my last video, if you watch my last video, you know that you remember I told you that if you are to trade for spikes, you will trade against the trend. That is, you will be buying boom instead of selling it. So in order for you to know the time to buy boom, you must be sure that boom is already on uptrend. Are you getting me? Boom is on uptrend. If boom is on uptrend, then you can place in a buy trade. But not that you just place in like that. You still need some confirmations. So this is the work of the blue moving average. So if the price line, this is the price line here. This is what we call price line. The price line is the one forming the candles. So this price line will be the one once it is above this blue moving average here. Once the price line here is above this moving average here, then you know that boom is on uptrend. And don't forget this particular strategy I call boom spike arrestor. It works only on 1 minute time frame. So if you are using it on higher time frame, it won't work. So if you want to trade on higher time frame, you use your boom, you use your price action strategy. So you analyze the market very well, then you wait for it to set. But here we don't need to do much analysis like that, because we are trading spikes alone. So we are trading spikes. So and this particular strategy works only on 1 minute time frame. So that's the first. You make sure that boom is on uptrend. But for you to know if it's on uptrend, that's the work of this moving average, this blue moving average here. So once the price line is above the moving average, just know that boom is on uptrend, is on uptrend already. So the thing for you to check is this under. So let's go to the indicator window now. So and again, you have to zoom out completely for it to work. For this strategy to work, you have to I've already zoomed out like this. You have to zoom in, zoom in completely, because if you don't zoom in, it can't really work for you. So for example, now see it here. So when you have to know when to place the trade now, you have to make sure this under the indicator window now, this red line, the red line, which is the accumulation distribution, and the Ichimoku, which is the blue line, you make sure they point together. So you can see they started pointing from here. So you can see they pointed here too. So you make sure they are pointing together. Once they are pointing together, it's telling you that a spike is coming very soon. That's what it says. A spike is coming very soon. But you won't now because this thing are already pointing. You now place your trade. No, you can't place trade based on that. So you have to use another confirmation. So for you to have at least enough profit, so that you won't lose your money too much. So the first thing is what? Make sure your price line is above the moving average for boom, which is telling you that the boom is now on uptrend. For the main time, it's now on uptrend. So you can easily see spikes. So and also the red line and the blue line should be pointing. So once the blue line and red line are pointing together, it's just telling you that the spike is coming very soon. So that's the work that's work of the red and blue line under the indicator window. Then the black line RSI is just showing you the general strength of the trend. So when you can only have spikes when the blue line and when the black line is already is closer to the 10. Did I use 10 or use 5? It's closer to the level 10 here. So we have level 10, have level 90. So level 10 is buy. That means once RSI is below this level 10. Let me point so that you see what I'm saying. Once RSI is below this level 10 here, this is the line, then this level 90 here for for the upper trend. So once boom is below, once the RSI, which is the black line, is below the level 10, so it means the boom has already been on a downtrend for long, so it's about to reset. So it's about to reset, then you have to wait then for this one to point, then you now place your trade. So you can also use this one also to confirm it. I'll still summarize everything. So you can see when this thing pointed here, you can see our black line. I'm just back testing now, so you see how it works. You can see how you can see that the black line the black line here, this is the black line, is already below. You can see the black line here. I don't know what's wrong with this. So see this black line here. See this black line, you can see it's below the level 10 already. So the black line is below the level 10, and also our blue and the red line are pointing together. So now as we see this thing now, we'll just place a buy trade. We'll enter with a small lot size, or if your account is big, you can increase the lot size. So you place a buy trade. Once you place a buy trade, you at first you'll be losing money. You know, I told you we are using aggressive entry. We are expecting the trend to change, so we are entering against the normal trend at that moment. So instead of you to be gaining some money, you will be losing some money. So it's pointing now. Just look after the pointing, see what happened. Can you see these spikes? See these spikes. If I count how many candles these spikes alone covers, let's count it. Let's count the candles this particular spike alone covers. So let's say we enter from somewhere around here. We'll be losing just 2 candles. 2 candles, which is just about, if you are using one lot size, that 2 candles is what? Is $2. That's if you are using one lot size. Now I told you is the lot size that will be determined. The lot size will be multiplied by the candles you have covered. So let's say we enter somewhere around here. So these 4 spikes, it has already covered our loss. Then we waited. See this long one here. So let's count the number of candles it covers from here to here. So let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33. So this one spike alone covers 33 candles within seconds. You can see how powerful this strategy is. So once the thing is pointing, it's just tell you that a spike is coming very soon. But at times there's to be what we call drawdown. If there is drawdown, that means it will be pointing, but the spike won't appear yet. But for you not to enter and you experience drawdown, that's why we have some other confirmations to look at before we just enter. So the first one you look at is make sure that the price line is above the blue moving average on the main chart, or nearly above it, because at times the spike happens, it's the spike that will now push it up. So if it is nearly above it or nearly closer to the moving average, then it can still work. Then the next thing for you to check is if your blue line and red line are pointing together already. So as I was saying, the first thing you check here is check if the price line is closer or above the blue moving average, so that you won't experience much drop down. Drop down is that maybe when you enter somewhere around here now, maybe the line has been pointing from somewhere around there. So let's say you enter somewhere around there, so you might be losing more candle. But if you waited, if you make sure you observe all the confirmation and everything has been set. You don't just enter a trade though. You have to make sure all the confirmations are set before you enter, so that you won't experience much drop down. So the first thing you check is the price line being above or closer to the moving average on the main chart. Then you now come back to your indicator window here. You check for the blue line and the red line, they must be pointing together. Once they are pointing, it's just telling you that the spike is coming very soon, not that you should enter. Then you now check your RSI, which is the black line now. You see that it's already below the 10. That means it has been oversold. It will soon buy. So that's just the meaning of RSI there. It's saying that the market has been on a downtrend for a long, so it will soon reset itself, so it will soon buy. So that's when you now check again. You now apply you place a buy trade. But let me show you something about this. There's one other this I haven't mentioned how to use it, which is the accelerator oscillator. That one is just to show you the trend, the strength of the trend. This blue and green, this red and green lines here. The green signifies a strong trend, while the red signifies a weak trend. Then you can see that there's a blue line in between. Please, if you don't get this thing, you can just put your comment on the comment section. I can address the question. So you can see this blue line here. I'm talking about this one. Sorry. This zero level, which this indicator is what the accelerator oscillator. So it has the zero level. The zero level is just telling you that, for example, now let me go back to where we have a downtrend, somewhere around there now. So you can see the zero level. The zero level was somewhere around there before. It went up by itself. So it's just, when you have something like this, it means that the trend is currently selling. So there's a much selling for boom. So you can't enter somewhere around there, and you can see that the lines are not even pointing. So you can't even enter around there. So you have to wait for the zero level to come down. The zero level must not be at the top. It must come down. You can see when it started coming down, the other one also started pointing. So they are all working together. So you just have to combine everything so that you can have a perfect result. So you can see the zero level has come down now, and the red and blue are also pointing, and the RSI is also below the 10. So that's a perfect combination. You can see when that one happens, there's a spike here. Can you see the spike? So that's how it happens. So that's for boom. You do the same thing for boom 500 and boom 1000. That's the same, because they all have the same method of trading them. But for crash, reverse is the case. Let's go to crash. So I will explain how it works for crash. So let's on crash 500. For crash 500, for crash 500, the normal trend for crash 500 is what is uptrend. So that means if you are trading the spike, you have to sell. You have to sell to trade the spikes. So, but when do you know when to trade the spike? You have to make sure the RSI here, which is the black line, on the moving average first. You have to make sure the price line is below the moving average. You can see this is the moving average here. If you want to check that, you can zoom out. You zoom out totally. You can see the moving average here. Let me point at it here. So this is the blue line here. This is the moving average here. So you can see that the price line is below it. You can see how many spikes that occurs. Only this long spike alone. Only this long spike can make your day. If you are able to catch this spike, this one, it's already okay for you for that day. There's no need for you to spending much time. That's the advantage of trading spike. You don't need to be spending much time in the market. Once you enter, you place your and you catch the spike, you go out. You don't need to stay in the market for long. Once you enter, you catch the spike, you go out. So, and you can see it just within seconds. You can see a profit of $10. So that's the advantage of trading spikes over trading the trend. So let's continue. You make sure for crash, the price line is below the moving average, the blue moving average, which will tell you that the crash is now on downtrend. So when crash is on downtrend, you can easily catch spikes. That's just the meaning. Then you now come back to your indicator window. You zoom in. Don't forget, you have to zoom in totally. You can only zoom out to check the trend, then you zoom in totally to check for the confirmation of the other indicators. So you can see over here, you can see how many spikes. So it just tell you that crash is on downtrend. See somewhere around there. Over here, crash is on uptrend. You can see the blue, the zero level. This zero level. When the zero level is not showing, if it is below 10, that means there's a strong trend, a strong buying trend for crash. So you have to wait for this zero level here. Sorry. Come in. You have this zero level, this blue line. You have to wait for it to come up. So as it's coming up, it's just saying that the trend is already weak. So it's not as strong as before. That's just what the accelerator oscillator is telling you, the strength of the trend. So it's telling you now that the trend is already coming down. You can see when it comes down, you can see our RSI already. Our RSI is already above the 90 level. I mean, you can see it has already entered the 90 level here. This is the RSI over here. Let me point so that you see it. So this is the RSI here. The RSI has already entered the 90 level. Then we now wait for it to point. You can see it's already pointed there. The red and blue line is now pointed. So you see how the spike now happens. The spike occurs when it's pointed. So that means you enter from somewhere around there. Let's say, sorry. So let's say you enter from somewhere around there. You only lose 2 candles before it spikes. So when it spikes, to cover your loss and give you profit. So that's just the advantage of trading spike. You won't lose much and you can control your loss. So you can see it now, another point in here, it spiked. So you can see the spikes as it's occurring because it's on downtrend. So so in summary now, let me just summarize everything. So the first thing you check here, for boom, the first thing you check if boom is on uptrend, because if boom is not on uptrend, you can't easily catch spikes. It's not that it won't spike, but the spike might be it might be a baby. There's what we call baby spike, small spikes. So if boom is on downtrend and you want to catch spike, you just lose your money, because it can go. You can see this one now. You can see how the trend went from here. Let me point so that you see it. So let's say, for example, let's say you place a buy trade for the spike. You can see how long this is. So that means you don't just trade it anymore. You have to wait for those confirmations. You can see how long the trend is. So it's not advisable to be trading for spikes when boom is on downtrend. So you wait for it to be on uptrend at that moment. So when it becomes an uptrend, then you can place your trade to catch spikes. So you have to check the trend for, which is by allowing the price line to be below the moving average on the main chart. Then you zoom into your indicator window. Then the next thing for you to check is to check whether the blue and the red line are pointing together. If they are pointing together, that means you can now expect spike. Not that you should place trade for spike immediately. You can now expect spike. Then also you check for your RSI if it is below the level 10 line here. So you can see the RSI is below the level 10 line, so you can now place a trade. Then for you to have a perfect result, you have to combine this thing also to know the trend. So at times it might be pointing for you. It might be pointing that the spike is coming, and the RSI also might be below the 10 level, but it won't spike immediately. So for you to know, is you use the accelerator oscillator to check the trend. If you can see that this trend, the strength of that trend is still high. For boom, if the trend is still high, I mean if the strength of the trend is still high, the zero level of this accelerator oscillator, this light blue line here, it will be above. At times you won't even see it, so it will be above. That means boom is currently on downtrend. So you have to wait for it to come down. So once it comes down, so you can now start catching. When it comes down, you can see spike started happening. It started happening. So you have to wait for the light blue line to come down for you to catch spike. And also for you to have more perfect results, you can also combine the knowledge of your price action, which is the value area of value, which is the zones. If this all this thing happens and you've confirmed all the indicators, at times indicators they used to this one they are leading indicators. They used to give you confirmations to enter before the market happens. So but for you, in order not to lose much money before it spike, you can also combine the knowledge of your price action, which is the area of area of values, which is the zones. You check after everything has been confirmed that their point is the red and blue is pointing, the RSI is below the level 10, the accelerator oscillator line, the zero level is normal at the top, is now below. Then you now check if there is a closer area of value, which is a point where the market has reached and it spiked. So if you can spot any of those, any area of value that okay, the market reached here and it spiked, so that's a double confirmation for you. So it will surely spike. So for example, when it got here now, so you can see, for example here, sorry, let me point so that you see it very well. See this particular place. So you can see market has gotten to this level and it spiked before. So when it's coming down there now, you can see it's reached here again at the spike and it spiked. See this way, this place also. Sorry. See this place also. The market has reached here before. It spikes. You can see when it later came to that particular place again, it touches there and spiked again. So you can, for you to have a perfect and accurate result, so that you won't lose more money before the spike happens, you first of all check the trend. For boom must be on uptrend for you to catch spikes. So you can't be thinking of catching spike when boom is on downtrend. You won't see spikes. If you see spikes, it will be a baby spike. You won't be able to cover up for your loss. You'll be losing money when you enter the trade. Before it spike, then it gives you profit. So if boom is on downtrend, you'll be losing a lot of money, and when it actually spikes, it may not cover up your loss for you. So for you to catch spike on boom, make sure that boom is on uptrend, and for you to know if it's on uptrend, the price line must be above the blue moving average on the main chart. So do you get it now? Then you now proceed to your indicator window. For indicator window, you have to make sure your blue and red line, which is the Ichimoku and accumulation distribution, they are pointing together. So once they are pointing together, it's just telling you, what is telling you that the spike will soon happen. Not that immediately you create your trade. No. Once they are pointing, it's telling you that a spike is coming. So you now a spike, then you now check for other confirmations, like by checking your RSI. Has your RSI gotten to the level 10? That is below the level 10. So if it has gotten to below the level 10, it's just telling you that the trend has been on a downtrend for a long, so it has been oversold. It will soon buy. Hope you are getting what I'm saying. It will soon buy. Then the next thing for you is to check the trend, the strength of the trend. If the RSI is below the level 10 and the blue and red line, they are also pointing, then you now check, okay, what's the strength of the downtrend? If the what's it called if the accelerator oscillator, the zero level, which is that light blue line, is still above. If it is still above, that means you can see another spike just happened there. You can see that spike. The spike covered these red candles are, for supposing I'm trading this trend, like 1 2 3 4 5 6 7 8 9 10 11 12. So that means I will have been spending 12 minutes for me to acquire only this one. You can see it just spiked again now. So you can see trading on spike can be so profitable if you know how to trade it. For example, I've been spending about close to 15 minutes in a trade, and a spike of 2 seconds just covered everything. So for example, I'm trading the trend. I'm trading the trend. It will cover all the money I've gotten and to give me loss. But supposing I'm trading the spike, I'll be losing this amount of candles. It will cover the loss and give me profit. That's just the beauty of trading spikes. So, and you can even control your loss if you're trading spike. If you are expecting a spike and the spike did not come, you can easily close it. You can easily close the trade, without catching the spike. You just have to take the loss. But if you are trading a trend and the spike hits you, even if you set your stop loss, spike does not respect stop loss. Once they will hit your stop loss away, and your stop loss will now stop at where the spike stops. So it means if the spike for like let's say for like 30 candles, and you put your stop loss at, let's say, 5 candles below your point of entry, so it will hit that your stop loss to that place where the spike is stopping. So it will give you those loss. The spike does not respect stop loss, so it will hit it to where it's stopping. So that means if the spike covers like 30 candles, and you put your own stop loss at, let's say, 5 candles below your point of entry, the stop loss will be heated to that place where the spike stops, which is 30 candles. So you'll be having loss of 30 candles. But if it is spike you are trading, if you are expecting a spike and the trend is continuing, it will just stop for you where you place your stop loss. So it won't hit it. It can't hit your stop loss away. It will stop for you. So that's the beauty of trading spikes also. So I think that should be the end of the video. You just combine the indicators with your price action, which is the area of value, to have the accurate and perfect result. Thank you. So this is the summary. After you finish watching the video, so you just come here, you can see the summary. I've summarized everything in the video here, but you have to watch the video first so you can easily get those steps. Then this is the summary. The main chart is only one of the indicators out there, which is the moving average. Then for the moving average on the main chart, for boom, you have to make sure the price line is above the moving average. Then for crash, the price line should be below the moving average. Then on the indicator window 1, the red and the blue line must be pointed, and when it's pointed, just tell that there will be a spike very soon. Then the other one, the next one should be RSI. The RSI should be below the level 10 for boom and above the level 90 for crash. And also make sure that the zero level line of the accelerator oscillator is below for boom and above for crash. So, and lastly, you check for a nearby zone area value to confirm your entry. So a place whereby, for example, if it is boom, a place whereby the market has reached below, which is the support. So a support, you can check my other videos. I've already released a video on all these things, on this area of values. So a support, that means a point where the market has reached before it spiked. Then when the market gets there, to surely spike. So you make sure you combine all these things together to have a perfect trading system.